Let's get more on this now with Vicky Pryce. She's Chief Economic Adviser at the Centre for Economics and Business Research. Hi there, Vicky. Now, unemployment has hit 5.1%. Is the bank risking a recession by keeping rates this high?
There are a number of people who would have liked to have seen a fall in interest rates this time as well. It hasn't happened, but the vote was very, very tight. So 5 against 4. So 4 of the members were still keen to see a drop in interest rates, which means really that we are now moving in the direction where probably in the next meeting there may well be a cut, because those worries about growth are there. And the interesting thing is you just talked about Goldman Sachs and what they're expecting for growth in the economy. In fact, the Bank of England has reduced its forecast for 2026 from 1.2% to just 0.9%. But it does suggest that it is looking at the way in which the economy is moving and worrying a little bit about this. And that, of course, is making markets think that if anything, they might cut more than once in 2026.
Right, and inflation jumped to 3.4%. Does this effectively kill the hope for an April rate cut?
No, because in April, actually, we might see, well, we're not going to have the data yet in the April meeting, but the April figures are meant to be very favorably affected by the fact that the government is introducing a number of measures. First of all, of course, wholesale gas prices over the period that is being calculated at present had gone down. So from April onwards, the expectation is that households perhaps will be paying a little bit less in terms of their energy. Of course, a lot depends on geopolitics between now and then. But what the government is doing is also taking away some of the costs that households have to pay in terms of moving to net zero. So some of those green levies are disappearing. It's also doing a number of other things, such as freezing prescription charges and also freezing regulated fares for England, so that will also affect prices. So there are forecasts that suggest that by April, we may be below the 2% target, possibly 1.7% and 1.8%. It's quite likely that this will be the case. The Bank of England, of course, will have to be convinced that other trends are not moving in a different direction before it decides when it meets in the next, in March and then in April again. We'll see whether they're just going to wait for that drop in inflation to happen or whether they will go ahead and cut rates next time round.
And as we mentioned earlier, retail failed to hire over the Christmas period. Are we essentially witnessing a structural collapse in high street employment?
There is a serious problem, and the retail sector has been losing people working in it for a very long period of time. I mean, we're talking about 100,000 to 200,000 drops in employment in retail a year for the last few years. There is a lot more automation that's taking place. So we shouldn't forget that. And we needn't worry too much about the actual spending that's taking place because, supermarkets, for example, over Christmas did suggest that things were going sort of reasonably well. But what seems to be happening is that the months where there are big discounts, people go to shops and buy or buy online, and then they continue save for the rest of the period, perhaps a little bit more than used to be the case, worried particularly about hiring ahead, worried about high food prices, which still seems to be persistently troubling. So there are quite a lot of concerns that making people be a little bit more careful. So retail outlets are reacting to this, of course, by cutting back, but also, of course, costs have increased for them. The national insurance contributions increase on employers, which the government did a couple of years ago, mean that it's more expensive now to hire people, particularly the lower end. And that's why actually some of the automation is happening, that people leaving school and trying to get first jobs or leaving universities, trying to get their low-paid jobs before they get into something else, are finding it pretty hard right now.
Vicky Pryce in London, great to have your thoughts. Thank you.